Gentlemen, it's Gavetti here back with another video. This video I want to get into personal finance. So taking control of your finances is huge if you want to build wealth. You need to invest your money. If you work a 9 to 5, if you make money hustling, if you make money through a side income, whatever it may be, or your business, you want to invest your money. Now, there's a rule that I live by, the 50-30-20 rule. 50% goes to investing, 30% goes to needs, and 20% goes to wants. This has helped me build a portfolio of close to 6 figures. I'm only 24 years old, so that's a big achievement for me. Excuse me, that's a big achievement for me. I started investing back in 2021, early 2021, and I've built a portfolio. It took me over 3 years now to get to almost 100K. Now, was it easy? No, like I said, I sacrificed half of my annual income, which, I decided to. I wanted to build wealth, not quickly, because obviously when you invest for the long term. So I decided, let me just invest my money while I'm young, so when I'm older, I get to enjoy the fruits of my labor. Let me plant the seeds now to build the forest later. That's how I think about it. So essentially, if you can afford that, 50% benchmark of investing your total income for the month or even annually, then you're in a good position. So for me personally, I was pulling probably about 3,000 roughly monthly, and I was able to invest at least 1,500 of that. Now also my employer had a 401k, which really helped. I think I put in about like 100 in the beginning first year, and then I increased it after my second year, and I was investing basically 300 monthly into my 401k. Now the 401k is a great investment tool. If your employer offers that, definitely match whatever they're offering. They may match 50%, 100%, whatever it may be. It's totally worth it. It's free money at the end. When you leave the company, or whether you stay there for a duration of your career, they're basically going to match your contribution. So that's important. And I say free money because it is free money. Now there's other investment tools you can use. You can use the Roth IRA, which is a tax-free investment account. Basically, you invest whatever your income after taxes. So for me, as I said, I was investing about 1,500 into my Roth IRA, and also a regular traditional individual account. But regardless, I think if you break it down with Roth IRA and an individual account, the best account you want to invest your money first is the Roth IRA. Now, there is limits. I believe about for the year of 2024, the limit is 7,000, so you can only invest only 7,000 into that account. Now each year it does go up. I believe last year was 6,500, and the year prior was 6,000. So 6,000 in 2022, 6,500, so 6,500 in 2023, and 7,000 in 2024. Now that's huge, because if you think about it, the trend, it keeps increasing every 500 every other year. Now, yeah, you're capped to 7,000 for this year, which, if you want to invest more, that's why I mentioned the individual taxable account. Now there's no tax benefits. You can invest as much money as you want. There's no limit. But essentially, anytime you sell your stock, you have to pay capital gains. Capital gains is basically, if you hold it, I think it's short-term capital gains and then long-term capital gains. If you hold it short-term, which is a 1 year, and you sell, then you have to pay a higher tax rate. If you hold it for more than 1 year, then you pay a lower tax rate. For me, I don't plan on selling any of my investments, so I don't have to worry in the near future. I plan on holding my stock and ETFs and index funds, which are 3 main choices you want to choose. Also diversify with bonds and also international ETFs and index funds, but those are the 3 main, and bonds too as well. Now, considering I'm 20 years old, I have a portfolio that's roughly about 40% in stock, 50% in ETF and index funds, and the rest in bonds. And I do have a little bit of crypto. You always want to expose yourself and diversify your portfolio. That's huge. Diversification doesn't just mean in stocks and in the market, total stock market. It also means real estate, commodities, gold, silver, artwork, anything valuable. You can also do watches. Like people collect Rolexes. They it's kind of It bounces up and down depending on the cycle, but gold is a big one, silver too. But back to the main focus is investing your income. I chose to choose the stock market because it's so easy. Literally one, two, three. So what you can do is take your income. Let's just say you make it roughly about 4,000 a month. If you can stomach putting 50% away, if you can't, that's fine. Any amount invested now towards your future is a huge stepping stone. If you can't even invest that much, just invest $100 a month. That goes a long way too. I think there's something where it's like if you invest $500 each month until the age of 60, you have close to a portfolio of 1 million in retirement. Now, considering how inflation's going and the dollar is losing its value very quickly, unfortunately, because the government keeps printing money. Million's not going to be worth $1 million today, just like $1 million wasn't worth $1 million back in the 80s. But you will have money saved instead of not having any money, and that's the goal, is that you want to at least have something in retirement or something later down the line. Because take it from me, my family never invested. I'm the first one to invest in my family. I'm very proud of that. I basically went to college for a finance degree. Finance really opened up my world to investing and realizing there's asset classes you can invest to attain wealth, acquire wealth, and pass that wealth down. So I learned a lot about the stock market, the bond market, options, everything. But for the regular investor who doesn't really know everything that I might know because of a finance degree, and I dedicated my life to personal finance and of course the gym and men's overall health, it's important for you to invest. So if you can even start with $50, $100, $200, and you want to increase over time, if you can, why not? Now, I get it when you're young, you're in your 20s, you want to spend money, you want to live lavishly, you want to buy the new car, you want to buy this, buy that designer. That's not okay. The reason why is because in the future, what is a car going to be worth? A car depreciates its value the moment you drive off the lot. Also luxuries too. It's not like you can buy a Louis Vuitton and resell it for a higher price. It's usually around the same price or a little bit lower. Meanwhile, asset classes in the stock market, such as stocks, index funds, ETFs, those appreciate over time. Now, I failed to even mention dividends. Dividends is such a huge part of my portfolio. Dividends is basically a share of a company or fund that pays you either monthly, if you're lucky. I have a couple ETFs that pay me monthly, a decent amount. They pay you quarterly, every quarter. There's 4 quarters in 1 year, or annually. And some actually give a special dividend at the end of the year just for being, a shareholder. So dividends is huge. You want to invest at least 20 to 30% in your portfolio. For me, at least 80% of my portfolio is dividends. Now, I like that because just in my mind, it's like, all right, not only is my appreciation in stock going up, my capital, because I'm continuing to invest, continuing to get shares, those dividends get reinvested into the shares I have. So let's just say I have 5 shares of Apple that pay 20 cents a dividend. That 20 cents every quarter times 5 is $1. So that dollar goes back into my original investment and keeps getting compounded. That's how you build compound interest. That is the 8th wonder of the world. Einstein, the most brilliant human being to be walking this earth, who's not around, of course, but he described compound interest as the 8th wonder of the world. Those who understand it get paid handsomely for it. And I understood that at 18, 19. And then I first started investing at 20, 21, like I said earlier. For me, COVID hit basically in 2020, and I realized the stock market went down, like tanked. And I was like, okay, this is a great opportunity to get in while it was discounted. And that's when I got in. And ever since then, as I continued to contribute every month, my portfolio kept rising. Now, I'm not gonna lie, I think in the year of 2022 was a little bit of a down market. 2023 was a down market, like not much movement. The stock market was kind of tanking a little bit, kind of just consolidating. Consolidating means just like moving sideways, no big movement up, no big movement down. And I kept investing. And I'm not gonna lie, for a period of a couple months, my portfolio literally was staying the same. Like it was hovering around the same amount. I think around like 50K. And I stuck to the course. I knew that eventually it was gonna go up because I just want to be clear, every single downturn in the market that's ever happened since the 1920s, that means the Great Recession, black market crash of 1987, COVID crash, 2008 financial crash, every time it crashed, it went back up. You know the reason why? Because 90% of the stock market is owned by the 1% wealthy. You think the 1% is going to let the whole market crash? No, just like real estate. Real estate is the bedrock of America. Congress makes the laws, the government makes the laws in favor of owning real estate. If they own it, why would they let it crash? I mean, sorry, go to zero. Now it could crash, of course, anything can crash. It's an asset class, markets correct. Each market corrects itself, but it's not going to go down to zero. Not just based on history. So just keep these things in mind when you're investing. I know it hurts to see your money maybe lose a couple of dollars or maybe a couple $100 or thousands of dollars when you first invest. But if you just invest and set it and don't touch it, who's to say it can climb? Like Nvidia. Look at Nvidia. Like a couple years ago, employees put their money in, left it, and now they're millionaires. So just keep that in mind. Now also we have some fair companies like Kodak, BlackBerry, Blockbuster, who Netflix kind of just took over. Like you have to be very aware of what you're investing in. Personally, I invest into ETFs and index funds and stocks that the majority of the stock market has its share value in. So like Apple, Microsoft. If you want some growth, Tesla's great. Like I mentioned, Nvidia. There's a lot of stocks you can invest into. Just do your due diligence. Make sure you're researching the market. Make sure your risk tolerance is good. Like if you're in your 50s, don't put all your money into something that's new. Like not really Tesla, but don't invest into something that you can lose your money, because you need that money when you're older. Now I'm in my 20s, I'm 24, so I can take more risk. So that's why I invest into like Tesla and other growth stocks. But for the most part, my portfolio is dividends. And like I said earlier, the reason why I chose the stock market is because it's so simple. All you got to do is open up a brokerage. Here are some brokerages. I use Fidelity, I use M1 Finance, and I use Charles Schwab. Those are my three main. I don't need to deviate off any of them. Now there's Merrill Lynch, which is good. There's Tastyworks. There's a lot of other platforms, but those are my three main go-tos if you want to use them. Those are great platforms. No problems, no issues whatsoever. I apologize. I also have Merrill Lynch too for my 401k. So there's many brokerages that you can use. There's not one that's the best. You can use Vanguard too. Vanguard's a popular one. I just never opened the Vanguard account because there's a couple minimums. Like you have to invest $2,000 or $5,000 minimum. So that's one of the minimum qualifications. But like I said, Fidelity, M1, Charles Schwab, and if you want, Merrill. These are great platforms. I have been no issues. I encourage you guys to open up account, either Roth IRA, individual, and there's other investments accounts too, like a 401k Roth IRA, just a regular traditional IRA. You can invest in that too. But two main accounts you want is a Roth IRA for post-tax and an individual account. Now, once you open up your account, it is so crucial to actually invest your money. There have been countless stories of people putting money into the account and thinking they're invested. You are not invested. The way you get invested is by actually purchasing a stock, ETF, index fund, bond, whatever it may be, and actually seeing that you own a share, half a share, fractional shares. That's huge too. You know what's the beautiful part about investing in the 2020s or recently is that you can buy fractional shares. You don't have to buy one whole share. You can buy 0.50, so fit half of a share. Now, do I recommend it? No, but if you don't have enough money to like buy Microsoft, which is $400, you put $200, you own half a share of Microsoft. That's amazing. Also a strategy, like I said, consistently investing your money. It's called dollar cost averaging. That's the term, dollar cost averaging. So instead of just lump summing, so let's just say you have 5,000 to lump sum into whatever stock, ETF, or index fund, you want to break it down. So if you have 5,000, invest 1,000 this week, invest 1,000 another week, invest 1,000 another week, invest another. You get the point. It's basically you're getting it at a different cost share price, and that helps because if you buy something that's at $100 share price and it goes down to 80, and you invested at 1,000 at 100, 1,000 at 80, and it goes to 90, you're getting it at different buying points, and it just sets a good average for your cost basis. So, you know, I've basically talked a lot about personal finance. I hope you guys can take this information and apply it. Pretty much covered everything: dividends, what accounts you want, what brokerages you want, exactly how you can build your wealth over time. It's been so easy nowadays. Anyone can build their wealth through the stock market. Why can't you? So hopefully this video was informational and you took some advice, took some words of my advice, and you can apply it into your life and start building your account and build your wealth. Okay, guys? It's been Gavetti here. Good day, gentlemen.